And in 2016, I started and funded a nonprofit to help minority and women entrepreneurs start and grow their own companies. And since 2016, we've helped thousands of entrepreneurs start hundreds of companies. And at the beginning of this, I come up with this service delivery idea for this nonprofit. I didn't know Dr. Butler at the time. He heard about it, said it was the best idea in 50 years in minority business. Cool. It never occurred to me to do it any other way. And he's been on the Hidden Star board now for 6 years, and we always want to start private equity funding. And so we're now out raising a $300 million private equity fund that will invest only in minority-owned and women-owned businesses. And thanks. That's me.
And that's Hidden Star.
That's Hidden Star.
Hidden Star, okay.
I'm John Sibley Butler.
You turn it on.
I'm John Sibley Butler, and originally from New Orleans, and I've been a professor at UT for a long time, and I'm in emeritus this year. And
what's the matter with you? Will you get her escorted out of here?
And Mike came to see me some years back, and about his concept of what happened to him. He was jogging, and he ran by two janitors, and they said, "We've got great ideas, but we have nowhere to go." So I went on this board at Hidden Star, and we have over 350,000 people on that website now. It's a 501c, and what it does is to provide the web page and other kind of advertising. And so we got together a year and a half ago, and we said, how can we do the funding thing? And I said, well, I'm an equity guy, you're an equity guy. We both have created great companies and sold them. As a professor, I've done a lot of research, but I've also created companies and sold 3 companies. And so let's do the first, something that nobody has done in history. Let's take the great companies that don't have to be high-tech and provide them with an equity kind of deal rather than a debt kind of deal. You remember that Willie Nelson did farm aid to help out the farmers who would collateralize everything they would have, and then all of a sudden they couldn't pay it back and they would take the farm from them. So what we want to do is do equity, not necessarily being on your board or being a part of the company, but equity going forward, which we'll talk about. So we've been very, very successful. So far, I think we have our first $20 million commitment and have a deal with Dow Industries, which is the best in the world, from England, to raise 300 to 500 million. So we're feeling good, and we both have been around investing lots of times. So that's what we want to do.
All right.
Yeah. Sorry, I wish I had gotten a chance to talk to the SBA guy. And John and I talk about it all the time, which is, especially in the federal system, there's an astonishing amount of money under an astonishing amount of pressure to get out to particularly minority and women entrepreneurs in the form of debt, right? And we're equity guys, and I had just happened to be on this jihad against debt, and the SBA does a great job for sure, but they're part of the system is trying to push debt out to companies that don't understand it, can't afford it, can't service it, and it ruins lives. And so we're equity people. We're going to make equity investments in these companies, and that's it.
Okay. Well, we've got your presentation queued up, so if you want to walk through that. But one question I wanted to ask you or have you respond to is one of the challenges that we have encountered fairly frequently when we began discussions around equity infusions, right?
I'm sorry?
It looks like everybody that's in the equity game is chasing the same company. Everybody's trying to get a $20 million deal or a 500 employee deal or 10-year-old company. And quite frankly, that's not where most black-owned businesses are.
Exactly. Couldn't be more right. And so our focus now, after 7 years of providing services to the minority business community, we know things, right? We know what you need to start a business. We know what you need to grow a business. And one of the things that sets us apart is our founding documents won't let us invest in anything other than a minority-owned or women-owned business, right? So we're not going to lie about it, and we're willing to be held accountable for it. What sets us apart is generally speaking, our guidance is they have to be in business for 5 or more years, and you have to have 10 or more employees. That's it. That's it. So we don't have to have a $20 million check size. We know after 7 years of doing this work, we know that there's not just a pile of those out there. They're out there for sure, and we'll talk to them too. But generally, we're talking about companies, 4 or 5, maybe $10 million of annual revenue, and there's lots and lots of those. With 10 or 20 or so employees, and there's lots of those. So the startup risk is gone, the execution risk is gone, and they're in that spot where, because the system is built the way it is, they're being just ignored by equity sources. Those are big enough to get debt, and debt will kill a lot of them for sure. So yeah, you're exactly right, and we're not going after those.
Okay. And John,
Yeah, let me
go ahead.
This is a return to Booker T. Washington's Negro Business League. Okay, so growing up in Southern Louisiana, we're at the Negro Business League, and we had a rotating credit system. And they said that Abel wanted to start a company, a malt shop or whatever have you. Everybody would get together and put $1,000 in the pot. You got 50 people, that's $50,000. And there was a Negro Business League in every city in America. So when I met Mike, I said, I'm gonna make you the white Booker T. Washington. We're gonna create the Negro Business League. Now he said he grew up in Alabama. Dad was in the service, and Booker T. Washington was his hero, so of course we bonded right then. So what America has missed, and what the black community has missed, is the Booker T. Washington infrastructure. That is, if you want to go somewhere and start a business, like in the old days, there's nowhere to go. If you want to go somewhere where somebody call your name, there's always somewhere to go. But to me, that never mattered. What's important is have the structure of a business enterprise, have a consciousness about business enterprise, because, for guys my age, I grew up with, not the right to vote. Family created wealth. Grandfather created wealth. I'm a 4th generation college graduate, and we couldn't even vote. So I've never paid much attention to voting. I want to buy a politician, don't get me wrong. But my point is, I told Mike, look, we're going to do this, and we're going to create the analog of the Negro Business League that Booker T. Washington had between the 1860s and the 1970s.
Okay. Well, the Texas Association of African American Chambers of Commerce is poised to provide you access to. Christian, I need to go cue it up for me. Do I just click on this? But we've got the raw material. We've got business owners that need what it is that you've got. Right. And so there's a Hidden Star Equity Fund. All right. You want to use the clicker, Mike, while you walk through it? Sure.
Yeah, why don't you walk through it?
Yeah, this is a slide deck for potential investors, right? So if anybody has, and we got $1 million minimum, so if anybody wants to write a check, I'll wait around here. But this is for the bankers and the university endowments. We're meeting with the entire Ivy League in a couple of weeks. And as we say, this is the right fund at the right time, for sure. It's a professionally managed minority business. Okay. The minority business community's been ignored by capital. It's not been ignored by debt. It's been ignored by equity. And we're going to change that. And the goal here at the end of this is to prove to the professional investor community that it's smart and profitable to make these investments. And I think we've got a real good chance. We're proud to tell you that we're the first private equity fund in the world to be fully certified as impact compliant by K2 Integrity out of New York. And what I get a lot is, wait a minute, that's DEI, ESG, impact. You know, you're a white guy in Texas. Why would you do that? And I was like, because we don't want to talk about it anymore. These are great companies that happen to be owned by a minority founder or a woman founder. If you don't believe me, believe the certifying agency, let's talk about these great companies, because there's a ton of them out there. I got a question for you. How many people think that this is how many minority and women-owned businesses are in America right now today? Anybody who thinks it's more than 10 million?
What's the question?
How many minority and women-owned companies are operating in America right now today? Over 10 million, over 5 million, over 1 million, under 1 million, 15,600,000.
Yeah, and let me just add this, Mike. We didn't want any bait and switching going on. Okay, so a lot of people, for example, during the so-called justice area, a lot of people said, I talked to every bank in the world, everybody. But then when the fund comes, they bait and switch, and they can put it with anybody. We didn't want to raise $300 million, and then all of a sudden, don't fund our categories and switch to a regular firm that would bring us a return. So when we did the certification, it means that we cannot go invest in Elon Musk. We cannot invest in anything that, unless what we said. But so what we hadn't said, there was a lot of baiting and switching going on, where people would raise money for black-owned firms and other firms, and when the money came, it was a bait and switch. They never saw it. So our certification say that all these firms will now have an opportunity. And Mike we'll talk about it, and we're also developing an ecosystem around everybody. What that means is that if we fund you and you need issues with marketing or finance, then you have somebody to go to. So well, let's just keep going through the thing, because
So this is the work that Hidden Star has been doing for 7 years. The term of art, you may have heard it, is technical assistance. It's advice and mentorship and helping with business plans and loan that. We've been doing that for 7 years. This isn't new for us. It's not a fad for us. We sailed through the certification process because we have, as they say, we have the receipts. We never did equity investing, which given my background made sense that we would eventually do, but I didn't think we knew about the space enough. And so John's right, about a year ago, I called him and I said, now's time. Now's the time. The world's on fire. We're going to go raise an equity fund to do this, and we are. We started, when I first started Hidden Star, it was just me and 2 interns in an office here in Austin. It wasn't scalable. So we started this online project, and to extend the reach, and we now have more than 300,000, I guess 350,000 now.
Over 350,000. Go back to the heat map and you can see where they were.
Yeah, and so we do a lot of stuff on that website. It's all free. Everything we do for that community is free, and that's them. This isn't a hypothesis. Those are our 300,000 members right there, and everybody's struck at the concentration on the right. Turns out it tracks population in the United States almost to 1%. So that's the population in the United States. You've just never seen it in red.
And I think 60% of those are black.
I'm sorry?
60% of those are black, I think.
Yeah, well, it's changed a little bit. So 80% of those 300,000 are African American, and they're either African American entrepreneurs or aspiring entrepreneurs, right? And about 70% of those are African American women. So that means, do the math, that half of our 300,000 are African American women entrepreneurs or aspiring entrepreneurs, which is really cool. So as we're telling these folks, there's 3 reasons to invest in this. Number 1, all we're doing is investing in minority and women. Half of the profits from the fund, half of the private equity, what they call the carried interest, is going back to 501c3 supporting the minority business community. And
Well, let me help you here. And we're training investment. Look, here's the deal. Between the 1860s and 1970s, we lost the training of investment people, okay? And so we're going to train people who can really understand investment and work with funds, okay? So we're not interested in just doing the fund itself. We want to actually train managers of funds. Again, it's a return to the Negro Business League that was certainly done at such a successful level.
yeah, it doesn't, again, it's more of interest to the investors, but that's a hell of a team you're looking at. And those 2 really freakishly good-looking guys in the upper left.
Well, I see one good-looking one up there. I don't know about the rest.
But this is a fund that is a great story, and it has attracted an incredible amount of talent. And you know, the work we do with Hidden Star, helping people start companies, is there's a whole lot of people in this country that want you to succeed, and they want to help you. Let them. Right? I'm one of those. Right? So anyway, a lot of talent.
Yeah, let me just say something about the people. Go back to it. Let me say something about Frank up there. So I called Frank, and we're good friends, a billionaire. He said, John, let me tell you something. My grandparents came to America and worked for 4 cents a day, could not borrow any money. Amen. Tell you about Brett Cromwell. When I was at UT, well, I just left UT, but I was part of the group that changed Austin from hardly no job to the Technopolis. So I founded the Herb Kelleher Center, director of IC Square. We did Dell Computers, we did Whole Foods, National Instruments, you name it. Brent Cromwell had my same position at Texas A&M. You know, Texas A&M and Texas are really the same schools when it comes to research. And that's his alma mater, by the way. And so when Mike...
Texas and Texas A&M are not the same schools. One is clearly better than the other.
Mike asked me, as he always does, what's the best person in class to do what we want to do with the ecosystem? This is a guy who wrote the technology transfer for NASA. And I said, one person, Brett Cromwell. Yeah. And he is responsible for creating the ecosystem for everybody who wants to, that we engage with, so that they can have help, whether it's finance, accounting, or growth, or whatever it be. So we have some excellent people here. And then Jerome Hamilton has a $50 million fund. He's a Morehouse man, and he's in Minnesota. And so we all have a dedication to business enterprise and nothing else.
Yeah, so I have a lot of fun saying NASA guy is on our team, but is it okay if I say one bad word? Sure. So every time you go to talk to a venture capital fund or a private equity fund, they all say the same thing, which is, hey, John, we're not just going to invest in your company, we're going to add real value. That's bullshit, right? It's bullshit when I say it, it's bullshit when he hears it, but there's a bullshit box I got to check off, right? It's not bullshit to us. I called, John and I talked, and I was like, who's the best person in America to hire to do this for our investee companies? And that's him, Brett Cornwell. He ran the tech program at NASA, and then he built out and ran that program at the Texas A&M University system, which is a best in class for 20 years. There's nobody in America better than that doing this, helping small companies with talent and technology, and he's on our payroll. And that's us putting our money where our mouth is, because NASA guys don't come cheap. But it's indicative of our willingness and our belief that you don't just write checks, right? You help. And Frank Kresebeck, you don't know this, but he's an actual legend. Started Austin Ventures. He's got all the Domino's pizzas in China. I hate him. These are the companies we were talking about. There's 300,000 that look like they'd be good investment targets for us. And this is really the interesting thing here, right? So minority and women-owned firms have had limited access to capital through no fault of their own, and yet here they are. They've survived, they've thrived, they're growing, they're doing all those sorts of things. And so the thesis is, if you can provide these founders, these entrepreneurs with growth capital and expertise, what can they do? This isn't going to be your average private equity fund. We're going to outperform. We're going to provide tremendous returns for our investors.
Right. And let me just say this, and I want this to spread. Let's say if we've got, how many members you have?
There are 30 black chambers. I would say conservatively 30,000 black-owned businesses.
You got
in those
50,000
chambers.
black-owned businesses. If every member here threw in $1,000, what kind of equity fund would that be?
Yeah, that's right.
This is how we're thinking, okay? We're thinking like Booker T. Washington, okay? Everybody put in, back then, $10, and we can fund all of these enterprises. And so, as a matter of fact, I can tell you this, we plan, as I said, Mike and I both, we have exited multi-million-dollar enterprises. When we get this thing going, we're just going to give it away. We're going to give it away to a manager. We need to change the entire structure of how you look at business enterprise in America. This has all been done by the Negro Business League with their focus on business enterprise. And so spreading it to different chambers, I told Mike day before yesterday, there was a woman coming in who finished from UT. She was alumnus of the year. And she ran the FDIC. She meets with presidents. And I think I want her on our board. So in addition to just doing the fund, we want every black chamber, do the fund, you know what I mean? Or everybody kick in whatever and put it in a fund and fund enterprises. Yeah. Go ahead, Mike.
So this is our evaluation funnel. There's 300,000 companies out there. We're going to end up investing in 35 or 36, which is more than an average. If you know, if you don't, you probably don't care. But the average private equity fund invests in 8 to 10 companies. We're going to do more than that. And the thesis here is it's better to do smaller investments across a broader base and enrich more and more minority founders rather than 8. Again, this is primarily built for investors, but it's again, we're out raising at $300 million.
Let's go to some type of companies that we're doing, Mike.
Yeah, and we've already got
some case studies.
6 potential investee companies that we've already identified. The first $30 million out the door. And these are all minority-owned firms. One of these firms, the guy was just here, Daniel Griggs. If you talk to Daniel, anyway. But in the lower right, you'll see the number $172 million in annual revenue. That's 2 years from now. That's an explosive growth company. The fastest-growing staffing company in America. This web designer here in Austin. It's a black-owned virtual reality and video game producer in Baton Rouge. a woman-owned company in the fintech financial services business. A really cool, scalable, place-based medicine and therapy center. African-American physician lady has got a really cool model, and she can scale up to 50 or 60 locations around the country. And
Yeah, and let me say, we met with a guy last week, black guy from Lake Charles. His company is going to be what, 2 billion, 3 billion? And he's looking, to get funded. And that's just one of the examples I work with across the country. As a matter of fact, Brother O'Neill, Raynard Jackson is bringing some black entrepreneurs to Florida to be with any congressman, any senator that they want, and I'll tell you about that. But the need itself is so great, and the solutions to the need just not there. So again, we're looking at the consciousness changing the entire structure. And it goes beyond black America, it goes to all America. In my MBA program, I had to take 2 weeks, last year just to tell people how important market economists were, okay? And so Mike and I are dedicated to changing the entire structure of the funding process. Once we get rolling, I want about 60 minutes, and then I'm gonna comment on one more thing. 3 weeks ago, we did a master class on entrepreneurship that's going all the way around the world, okay? A master class. We sit in a studio for 2 days, 2 full days, and we did a master class. Mike, talk about that.
yeah, so in the seed planting stage, right? You want to, these minority chambers of commerce around the country, they can grow their own membership base. We've got this master class, and I asked my wife, what do you think when you think master class? And she said, celebrity. I was like, well, I don't really reach that level, but what else do you think about? And she said expert. And so, not to be immodest, but there's not 10 people on earth better suited to teach a master class on entrepreneurship for minority and women founders than me and John. So we went into the studio, and we've got this thing. In a few weeks it'll be out, and it's we'll be selling it. It's a fundraiser for Hidden Star to help provide more services to the minority business community, and it's going to be great. Because there's a lot of bad information out there. Mm-hmm. There is a pile, and the SBA guy just was here and gone. SBA does an incredible job with materials and support and all that kind of stuff. The only thing they do that I disagree with is focus on debt rather than equity. But everything else they do really, really great. Hell, they do debt great. I mean, they do that, and they do it really well. But it's, anyway, this master class is going to help spawn an entire new generation, an entire tidal wave of minority entrepreneurs that now have the tools and the knowledge and the know-how to get going. And can't wait to see that.
Yeah, and if I hear one more time, well, we're complaining because we don't have funding. Get off your ass and do your own funding. Nobody cares about your black ass. Get off your ass and do your own shit. Get off your Martin Luther King, whom I love, knees, and get up and do something. Go back to the 1880s, 1890s. I grew up in southern Louisiana in total segregation. It was looking down on 80% of the white population by the time I was 18. Because of Dillard, because of Xavier, because of Morehouse, because of Spelman, right? And I was telling Mike, whose wife went to LSU, where I went, that's the only reason I worked with him, because his wife went to LSU, right?
A&M's better than LSU.
Well, they beat us last year. But my point is, I want to change. It'll be hard to do. I'm working with Bob Woodson of the Woodson Center in Washington, D.C. I'm working with other people around the country. I'm working with the Mormons up in Utah. I'm working with white Jews in Austin, Texas. And you got to just get off and realize that Hamas are doing the right thing yourself, rather than every time we look around, well, it's going to affect and black Americans more. The hell with that stuff, right? You got to wake up, tell people to go to hell, and get on the fundraising stuff for enterprise. I'm gonna stop now because he know he have to pull me off this.
Surely
pull
there
me
are
off this
some
damn thing.
questions. Surely there are some questions for these two gentlemen. Thank you, one, for your presentation, but I know that there are questions about your program. Yes, Carol.
Thank you. My name is Carol Guest. I'm serving as vice chair of our illustrious organization. And I wanted to ask, as far as the targeted companies that you invest in, a lot of our members are service providers and may own like food trucks or restaurants or things of that nature. How often do you invest in those types of businesses? Do you find that they've been good investments, or what are your thoughts?
We love it.
Yeah, we love it a lot. So remember, this fund is brand new, right? We've got a bunch identified, but the service, this community is heavily weighted on the service company side because they're not capital intensive, right? So if a community that's been starved of capital through no fault of their own, you got to go. I mean, it's a hell of a sign of industriousness, right? Which is, hey, I can't get capital. What kind of company can I start? Well, there's lots, right? And there's lots out there. So we love service companies. You know, it's a tiny little bit of a different metric from just a sheer financial analysis standpoint, but not much. You take the balance sheet out of it, and they're pretty damn similar. So we like service companies a lot.
Yeah, let me give you a case from mine. So we had a malt shop when I was a kid. And I said, Dad, let's do another malt shop on the New Orleans highway. He said, no, because you're going off to college, and if we're not successful, they'll take everything. We are targeting those kind of enterprise, mom and pop, with a great business tradition. We're not startups. 5, 8, 9 years, 10 years. So you come to me and you say, well, you know, I have a little marketing firm. I have 2 people. Boy, if I just had $5 more million, we could take our revenue to $800,000 to $6.5 million. We'll say, okay, we're going to invest in you. Remember, this is an equity investor, okay? What that means, this is not a loan. And I was talking to Mike 2 years ago, because every mom and pop, I grew up in one, they want to own 100% of it because they want to pass it on to the kids, and the kids don't want anything to do with it, basically, right? So I said, Mike, they will have a way to buy all of their equity back if they want it. So we'll do a lot of things that's not done traditionally when I have done investment. I'm an investor myself. I'm an angel investor myself. I invest in a lot of companies, right? But we welcome those kind of enterprises with a great track record who really want to grow, who really want to expand. And then we'll have the ecosystem where you can call anybody that will allow you to expand. Again, just like the Negro Business League.
Demetrius, Dow Industries, one of your dead guys. Could you tell me if you guys anticipate softening your guidelines for equitable positions from maybe lower number of employees or less time in business? And can you give us an example of one of your investments, say if it was a revenue-based business that maybe generated $500,000 or $800,000, what that ROI for you guys looks like?
Yeah, do the placement company. Placement company.
Yeah, so
Do the placement company.
We helped a guy get started, African-American guy in Dallas, wanted to start a staffing company for convicts, felons, right? Well, that almost immediately got expanded, right? Because most staffing companies have 50% of their workforce have been in criminal justice in some kind of way, right? And so we started this guy, and he ran it for 2 years, and it turns out he didn't like it. He wasn't any good at it, and then he had a heart attack. You know, I've never thought about if those dots are all connected, but there you go. Anyway, so my nonprofit bought it back, and I stepped in as CEO. right? So the nonprofit owns it. There's 9,000 staffing companies in America. We are the only, if your nonprofit owns it, you get to think about profit differently, right? And so our workforce is 82% African American, about 9% Hispanic, and 10 or 11% white. We are the only staffing company in America that gives profit sharing and stock options to the hourly workers we send out to factories and distribution centers and warehouses. Well, that's a hell of a thing, right? It's a hell of a thing, and we've got some great video of guys just losing their mind getting a profit sharing check that they didn't expect, right? So it's the fastest growing staffing company in America. We specialize in what they call light industrial, and we send about 900 people a day out to work. And that's an example of a company that we helped get started, and they'll do, I don't know, 35 million this year.
You know, if you do the analog of a bank and a loan, right, they're going to want 3 years of tax stuff, right, to make sure that you're doing the right thing. We'll ask for those kind of numbers, but I think that when you work and depend on a business and you're dedicated to a business, so we'll say from a mathematical point of view, let's say we hit 2 out of 10. I think this is what I think, with the ecosystem, we might hit 8 out of 10. Now let me tell you what I think. When we started Austin, I don't know, in 1980, right, or whatever it was, we created the ecosystem for Dell Computers to do well. We created the ecosystem. We did Southwest Airlines for Herb Kelleher to do well, who gave me $10 billion for my center. I love him to death. We created the ecosystem for evolutionary technologies to do well. And so when you have an ecosystem, and I ask people, hey, if you want to be a country and western singer, where do you go? Well, you go to Nashville, right? If you wanted to be a Temptations type, where do you go? You go to Detroit. I know because I went there and tried. If you want to be a movie star, where do you go? You go to California. So that is the ecosystem that we've got to do, and that reduces the risk, okay? And under those kinds of ecosystems, like 99.2% of all the great companies were founded in Silicon Valley, Austin, Texas, and Boston, because they had an ecosystem that could scale, right? So, you know, it's a kind of equity. We want to talk about that. We don't want to be on their board of directors. We don't want to be on their company. We're taking the equity going forward. Talk about that. Help me out there.
Yeah, among other things, the optics of us taking a control position in a minority business are really terrible, right? So we're not doing that. Generally, our investments will be somewhere between 20 and 40%, so you don't have to give up control. And they're either great companies or they're not, right? And we think they are, and they don't need us. Your typical private equity firm buys the whole company. So we're a little bit of a tweener between a venture capital fund, right, that buys a minority interest or a non-controlled position in a young firm, and a private equity which buys the entire company of a more established, profitable company. So we're a little bit of a tweener, and we're just fine with that. We don't want a control position in your company. We think we're investing in you because you're pretty good at this. So yeah, it's you know, again, it's an entirely different kind of mindset with regard to who we're investing in and how's that going to work, and it's.
And let's talk something about raising the fund. You'd ask about raising the fund. You know, when you raise a fund, people say, well, they're raising a fund for $500 million, they're raising a fund for $2 billion. Well, that money comes from wealthy families, it comes from pension funds, it comes from all kind of university funds, you know, the endowment from Harvard, the endowment from Yale, the endowment from the University of Texas at Austin. And so, how did we get in the game? How did we get in the game? Well, there was a board member, Frank, and there was a company in Europe that loved what we were doing, and they made this comment. Hey, I know 9 billionaires who are women, in Europe, and we love what you're doing. It's the first of its kind. So you get friendly people to invest, and this is the difference between us and a lot of others, you know. When Chase Bank called us, I said, well, you know, bankers do things different. Everybody will be rewarded here. We plan on bringing a return. This is not when the women get mad and go to the bank and say, if y'all don't give me some money, I'm going to call you a sexist, or when Jesse Jackson get mad and go rob people and say, if you don't do this, I'm gonna call you a racist. Excuse me, Jesse. I know he's an Omega man, I'm sorry. Right.
Good Omega man.
But my point is that we want to do things very, very differently. If Chase invests in us, they have a return coming. See? If a pension fund invests in us, they have a return coming. And what I've learned during the process is there are so many banks. Doing the Florida thing, I had conversations. Everybody wanted to do something, you know, from Japan to China, and et cetera. But nothing really happened. Because this is not a giveaway. This is flat out investment and providing a return. You want to comment on Dow Industries?
Yeah, again, today's our first day of going to market, talking and raising actual money. We retained an investment bank out of London called Dial Partners. They're the IT company in the world now for raising this kind of money. And we hope to have our first close between $50 and $80 million by December. So if y'all know anybody that has a company that would like to be invested in, we're probably going to start writing checks in December or January. But it's an interesting cultural divide between, what's that old joke about the English and the Americans, where common people separated by a common language. They're weird dudes over there. Nobody's recording this, are they? Anyway, we love them. They're great, and they're going to market, and we'll get a bunch of money to making great investments in great minority-owned companies and hopefully change a bunch of lives.
Okay. Well, we look forward to it. Want to thank you, number one. John, you know, we were at least a year in the making of getting this opportunity.
Well,
as I mentioned,
you know, I'm gonna take care of you.
They were not quite prepared
I'm gonna tell you
last
about
summer.
Reynard's business too. Mm-hmm. You know, if you want somebody to go, you know, Reynard to meet with some congressmen.
Okay. Okay. And what I think, the one challenge I would offer you is to replace your idealizing National Business League or Negro Business League and replace it with Black Chambers of Commerce. I think you'd have much better success with audiences like this.
All right, so let's get online. I think we could raise easily a $50 billion fund.
He spent a lot of time researching the life of Booker T. Washington. He's just showing off his academic credentials. Dr. John Butler, Mike Dewey, thank you so much for it.